exactly what your life would look like if you were a millionaire. The truth is, you would have a lot of the same concerns, consistently working hard to grow as a person and develop fruitful, loving relationships all around you. Your greatest concern in life would still be your health and the health of those around you. There would be one main difference though, and it's an important one. You would no longer have to worry about money. You would have the freedom to do what you wanted, when you wanted. You would have control. Financial freedom is the freedom to be able to make choices. The choices about what you do with your most precious resource, your time, who you spend it with, and where and what you do with it. I want you to open yourself up as we begin to talk about what it takes to become rich trading. Traders are often very concerned with how much money they can make and how quickly they can make it. And each day and each trading session is approached as almost the improbable or impossible. The reason I want to share this formula with you is because it's very important to have the correct mindset, the mindset of an investor. And it's important to focus on this formula for the bigger picture. And this is going to help you to be able to execute, which is what you need to do in order to achieve your goals. You need to be able to execute. So let's take a look. Starting with a $3,000 balance. How do you get there? How do you achieve your goals? Where are you starting from? If you're starting with just a $3,000 balance today, and you are committing to making for the next 5 years, regularly, yearly, another $3,000 deposit, what is that? Like $260 or so a month. Go ahead and take a look, and the rate of return. You know, holding Bitcoin, what do you think you could do? What do you think you could achieve yearly? What happens if you use something realistic? What happens if you use something like a 30% return over the next 5 years in Bitcoin? You're looking at taking a total deposit over 5 years, $18,000, and growing your account to $46,000. That's only over a 5-year period, but it's also with a 30% return. I think that I personally expect to achieve over a 70% return annually in Bitcoin over the next, 10 years? Absolutely. So let's take a look at that. Let's make that 10 years, 70%. I think underestimating greatly over there. We'll see. We don't know. I think it's safe. I think it's safe to work out my plan using 70% expected return in Bitcoin over the next 10 years. And then you're taking that $33,000, you're turning it into $2 million. Now, $2 million is comfortable. You could basically buy whatever you want whenever you need it. You know, really very comfortable. But the thing is, when I first started doing this, I did this with 11 years. It was an 11-year plan with 3 halving events. And if you really want to plan this out correctly, starting today, you could go ahead over the next 11 years, expect to have 3 more halving events. Next one, it's every 210,000 blocks. Next one, estimate 20,024, 20,028, 20,032. But the thing is the bull market happens the year after the halving. So you're going to want to make this a 12-year plan, 70% annual return. Now you're looking, total deposits over those 12 years, $39,000, $3,000 a year. You're committing to this plan, to your investment plan. And then you're looking at, $5 million if we hit our expected 70%. Anything could happen. Understand your risk and what your risk is before you make any investment, and do not invest any more than you could afford to lose. But make sure you make calculated risks. Is this a calculated risk? Now, if there was just an 85% annual return in Bitcoin over the next 12 years, you would be looking at something, $15 million. That's from here on up. You go on borderline ridiculous for a 12-year plan. But 70%, 12 years, next 3 halvings. You're starting today. $5 million is rich. $2 million, you're definitely comfortable, no question about that. But $5 million, I would say that it's a great plan to have in place. I think it's foundational, fundamental, that anyone beginning before anything else should have this plan in place. And then you could go ahead and leverage different investments. CTM. Mic check, mic check. What's going on, everyone? This is Jordan with Conquer Trading and Investing. Getting ready here for our last public live stream of 2022. I wanted to make sure to say goodbye, to wish you all and your families wonderful, wonderful Christmas, holidays, and a coming new year. and I wanted to leave you with a lot to think about to change your life for 2023. Everyone, thanks for being here today. We're going to be in this session today doing Bitcoin analysis to start this off. We're going to be talking about dollar cost average strategy. We'll be reviewing the market together and then going over current CTM positioning as we do each and every day. If at any point you like being here together, you learn something new, you enjoy the analysis, please go ahead and smash the like button. It gets me fired up. And besides, it is a Taco Tuesday. All right, let's begin this by going over some Bitcoin analysis and looking at the current market and doing some traditional TA that has helped a multitude. We're going to start this off, and I want you to notice a few things on the chart. The first thing I want you to notice is this line over here labeled previous cycle ceiling. I want you to see how we've crashed under it. That was on the collapse on Scammy Scam, the FTX collapse over here. We were able on the CPI event to break back above it. That was a major repair. And then Powell taking the mic last Wednesday brought down the house. And you could see over here this yellow line that was showing that, first of all, we collapsed below that major repair and triggering a short or an exit, however you view the market, however you look at the market. Before we go forward, I want you to see a couple of things. I want you to see over here. This is in June when you had the 3 arrows, the Celsius collapse. Notice how this level, the previous cycle ceiling, held. Let me come to a 3-day chart. Let me zoom out a little bit. I want you to focus over here. This was the breakout of the bull market. You see the breakout, the retest of that level, and then you could see the bull tested again, and then the bull market was off. Now, if you go back further, this is not a level that many people pay attention to, but the market sure is. So I want you to understand what it is and why it is. You can see over here, this is a few days where price traded above that previous cycle ceiling back in late 2017, but you could see prior to that bust above, it was holding as resistance. And then after it bursted above, and then there were no more buyers, right? I don't know how much Bitcoin changed hands over here. It wasn't that much. And then after it collapsed down on the pump up, on the last grasp, you could see that's where it touched again that previous cycle ceiling. That's where we are today. Today we are flirting with first breaking above, Powell taking us back down, and now we're going to get into a little bit of TA as we look forward to it. Big shout out, my brother. All right, let's start over here. This was the previous cycle ceiling, this line over here, right? We broke above it. CPI hot, Powell smashing those expectations down. Look at this and notice this. Do you see that on the way down right here? First touch access support, and then you could see that bounce up and then break down. This is how we set up the discretionary entry, connecting these two lines and extending this trend line out. Below that was the trigger for the entry right over here, right around the whole number 17,000. You could see that after the break of that trend line, price comes up, tags that broken support. Here it was support, tags the broken support, and it holds as resistance, and then price resumes down, conquering the markets all day long. And yesterday we did an update, and I said, you know what? This was the original stop loss on that particular trade. We're talking about short-term price action here. We're talking about trading the markets on smaller time frames. We're going to get into some longer-term strategies in a moment. But I want to make sure as we close this year out that everyone has this type of awareness, right? CTM strong. You could see yesterday, this is where the stop loss was placed on this trade, right? So going into the trade, everyone focuses on entry. Entry is important. You want to get the entry right, and you could see that this was how you get the entry right? Boom, boom, boom. But more importantly is where you place your stop loss. And more important than that is the way that you're sizing your trade is depending on how much you're risking. For example, you can see over here in this instance,
Price is roughly $500 from entry. So if you're risking on this trade 2%, that depends on how big your position is. Now, if your stop loss was over here, all the way up here, and you're still risking 2%, your position size is going to be different. Stop focusing on your entry. Focus more on risk management, namely how much you're risking per trade and how you're sizing that trade, and you're going to go a lot further. But I don't want you to go further. I want you to climb that highest peak. I want you to be able to make the summit. I want you to be able to achieve the goals you set out when you first got into the markets. That takes lots of hard work. That takes dedication. Now, yesterday I said, look, I don't know if I'm going to move the stop loss. I'm leaving it here. After the price action since, right, we saw a price extending its losses down, and then we saw a major event. Bank of Japan decides to adjust their yield curve control. We'll talk about that when we get to market review. And then price, Bitcoin spiking up. Why? I don't know. I think that what we saw is that we saw, as a result, a stronger yen, therefore a weaker dollar, therefore a stronger Bitcoin on the weaker dollar. But you could see that price has come up over here. Look at that, right around where entry was, and then since has faded off. At this particular time today, I think it prudent. Look, we're closing into the holidays. There's going to be less and less people involved in the markets until after the first week of January. Be careful out there. No reason to do anything but be overly cautious. Right now, I'm moving that stop loss to break even, and you could see that also is, if price goes back above here, look, I'll just get out of the trade at a break even. No harm, no foul. If that happens, we are still underneath this important level, the previous cycle ceiling. We are still underneath this broken support acting as resistance. You got a confluence of resistance over here. We'll take a look at where the next short entry would be if stopped at over here, because right now, technically, this has a strong bearish bias and structure. Now, that was different last week. That was different once this was reclaimed over here, the previous cycle ceiling. But that's been lost since. We have a negative bias over here, potentially still targeting down in this area, which is the lower support of this descending wedge, falling wedge. It is a bullish pattern. A breakout to the upside is a bullish pattern, but we're not there yet. We're far from it. We're actually right now have a very bearish bias, losing the important repair of the previous cycle ceiling and then the trigger of the short trade over there. So if you were to see, let me find the right chart for you. If you were to see price stopped out where we just put the line. Hold on, we'll get there. If we saw price stopped out over here, the way that I want you to look at it, and this is CTM strong all day long, I want you to go ahead then and redraw the line off of this November low and then off of this low over here. Extend the line out like this, and as long as price is above here, if you're stopped out here, as long as price is between this overhead resistance, confluence of resistance over here, and above this line of support, it is simply no man's land. Stay out of the market. There is no reason to be in the market. Stay out of the market. If you see a breakdown of this trend line, then that's a bearish event. That's a big sell impulse, and that could be triggering or targeting, I should say, the lower end of support. If you break out above the previous cycle ceiling, this trend line too, that would be nice and healthy. But at this point in time, if it happens over here somewhere, just the previous cycle ceiling, that is a bullish repair, and that should be targeting this resistance above over here. If you haven't hit the like button yet, please go ahead and hit the like button for sure. Pure signal above 18,600. You can see that horizontal resistance as well. That would be then targeting the upper end of nothing. What are we looking at? Let me go to a different chart. Let me go to this chart over here. I wanted to show you on this chart over, it would be targeting over here. 18,600 would also be the breakout of this trend line over here. You see this trend line from the August top, and then you see it connecting to the November top. A breakout above there, right? Above that horizontal resistance I showed you at 18,600, coinciding with that trend line break. That would be a big bullish repair taking place. And then you would have one and then two big bullish repairs taking place. So as always, you need to be on your toes. There's no guarantee. A lot of people who have a bullish view of the market think that the market's coming off 40, 50% more. I don't know. Maybe. If it does, we'll be on the right side of it, but I don't have a crystal ball. All I could do is follow these lines and manage my risk around it. Look at this. I'm going to clone this line over here. This will finish up our discretionary price action over here. I'm just going to clone that line over there and show you. You could see it. I want you to focus over here in this area where you have the underbelly. And then again, that's where we touched into. So potentially that too could be overhead resistance. If you're playing it safe, and it's good to play things safe, right? Just wait for that horizontal resistance and that break of this trend line over here. Above here, that should be a pretty good result. And by the way, you never know. So whenever you're taking an entry, even if you see a breakout above this trend line, you have to manage your risk. You have to know first where your stop loss is, size your position accordingly, and then go ahead and watch it happen. All right. CTM strong. I'm glad you're here too. Thanks for being here. Yeah, I mean, one, it's a great question. And looking at this is from a different view. This is on the daily. And again, here's that low, that November low. And then if that stop loss is triggered, right? Right now we're holding a discretionary short position. At this point in time, you'd be waiting with that higher low in place, and you're in no man's land. What we viewed out before is no man's land, right? If stopped out, currently we're short discretionary. If stopped out, you would be no man's land. You have very good one, a higher low in place, but you're waiting for the breakout above the resistance, above the previous cycle ceiling to get out of no man's land, or break below here, and then looking for a resumption back towards potentially the lower end of the falling wedge support. All right, so that's pretty strong. I mean, that's very strong analysis, and it's not complicated. It's just a question of being disciplined. You could do it. Now, let's move forward. Let's talk a little bit about DCA strategy. Listen, 2023 is coming. 2022, that better have been a huge wake-up call for you. A lot of people in their 401ks, their advisors never told them when the Fed pivoted back in the fourth quarter of 2021 and began the tightening cycle that maybe they would like to make some changes in their portfolio. A lot of people are really, really hurting. Buying and holding is not a strategy. In the beginning of this video, we talk about a foundational strategy, dollar cost averaging into Bitcoin, starting with $3,000, adding $250 a month or another $3,000 a year for the next 11 years. Now, it assumes we look at it first with a 30% return. By the way, do you know how incredible a 30% return year over year is? The great Stanley Druckenmiller for 30 years has averaged a 30% return. The best of the best. Renaissance Technologies, the best fund there is, the Medallion Fund, after fees returning 65-70% a year. The best of the best. The best of the best. 30% a year. That was the minimum to get to that high end, to get to the $5 million, 11 years. That assumes a 70% return. Do you think buying and holding Bitcoin and dollar cost averaging into Bitcoin is going to get you there? I have no idea. There's no certainties whatsoever. Now, I have no idea what the year over year return of Bitcoin is going to be for the next 11 years. I have no idea. I have strong opinions on it, but there's no guarantee that Bitcoin will win. There's no guarantee on the release of the central bank digital currencies that the governments won't come against Bitcoin, maybe closing all on and off ramps. And for however long, Bitcoin might undergo some serious turmoil. There are no guarantees. You want to put everything in your favor in order to succeed. We've done that. We spent the bear market building. This is called the BTC daily long-term strategy, right? I want you to look at it on the buy side. I want you to see look what's going on over here. Here's the top. Had an opportunity here to dollar cost average in to buy Bitcoin over here. Didn't go anywhere out of the market. Since April, are you dollar cost averaging into Bitcoin? Absolutely not. You're dollar cost averaging into a cash account. This strategy, I think, is a fiat strategy. It is not a Bitcoin strategy. You should have your Bitcoin stash strategy, cold storage, separate strategy. Separate strategy. This is a fiat strategy that takes advantage of Bitcoin. This whole time, anytime it's gray, instead of dollar cost averaging into Bitcoin, you're dollar cost averaging into your cash account. It doesn't matter what broker you use. Interactive Brokers, TradeStation, Oanda. I would not use a crypto broker at this time. I would not use a crypto broker at this time. You can see over here that you get into the market, all this preserving your purchasing power, right? Preserving whatever your account growth has been, preserving it in the market, out of the market, preserving it. If you have a 50% decline, it takes a 100% return to get back to break even. If you preserve your purchasing power at the top, when you have that 100% gain, you are growing your account by that much instead of getting back to break even. 2022 should have helped a lot of people really realize that it takes thoughtful management in order to do epic things. And you could do epic things. There's no question about it. This strategy is dollar cost averaging month over month instead of into Bitcoin, into the cash account, and only waiting for the time when it's right to get into Bitcoin. That means, by the way, right? That means in 2022 this year, you're not looking at any type of gain. You're looking at a loss of 3.6%. A loss of 3.6%. Now, granted, that account has grown from the dollar cost averaging into the cash balance, but it's a lot better than simply buying and holding and hoping. It puts the probability of you achieving that goal, that beyond impressive legendary return, and puts it in the odds in your favor. Now, it takes a while. This is 2 years now. That's only a 64% return. Now, granted, that's 30% a year. Stanley Druckenmiller, legend of Wall Street, legend of legends, 30% a year. You're on par with him. 11% drawdown. This was built during the bear market. This is back tested all the way through. Forward testing continues to deliver so far. What's your plan? 2020? All right. People have been holding Bitcoin since 2020, and they're back to where they were. At least here, again, 9% drawdown, 10% drawdown, 500% return. It is CTM strong. You could do that just as a buy strategy. Buy side only is enough to exceed your wildest dreams. That's my personal belief. If you have the ability to trade the buy side and the sell side together, it's obviously a lot more profitable. You could see over here, this is from that same period, 2020. Drawdown's higher, 22%. The return is also twice as high. And you could see even here in the bear market, able to go ahead and at least take out some profits over here instead of just 3% loss. You know, look, 16%, 15%. It's still better than buying and holding and being down 70%, 75%. Here's this strategy lined up with the TA. And you can see that, look, even though over here we have that buy repair, we're just simply out of the market, continuing to wait, protecting and preserving that capital. Let's move over and talk a little bit about the current market situation as we review the market coming into the end of the year. By the way, big deal over here with the Bank of Japan allowing their 10-year to rise to 0.5% from 0.25%. That's a 100% increase. But in order to make the transition as painless as possible, it will increase bond purchases 9 trillion yen from 7.3 trillion yen per month. And we saw as a result of it, the Japanese yen strengthening across the board. Let me go ahead and look at that this morning with you, looking at some Forex pairs. You could look at this. A 4% move in foreign exchange is ginormous. Massive move here on the yen. You could see it on the Australian dollar, Japanese yen as well. You could see that 4.7% move. And then when you look at the US dollar, Japanese yen, again, you see another massive move. 4.4% move in FX is enormous. And what that's doing is that's causing pressure on the dollar, because the second largest trading pair in making up the US dollar index, the DXY, first is the euro, 57% weighted in this index. After that is the Japanese yen, and you can see it's putting pressure on the dollar. I assume the reason for crypto's rise or bounce this morning, don't forget the way that we looked at it, it's still a bounce, right? We're still, let me jump over here to the 2 hour. We still have this sell impulse live. It bounced. This line doesn't belong here yet, right? That line will only be added if we get stopped out over here. Right now we're in a short trade. I don't need to add that line for the next sell impulse. I'm short off of this sell impulse. All right. So where does that take us? Dollar over here. You could still, between these yellow lines, right? Now, below this top line of resistance, I view the structure of the DXY as towards the seller and seller biased. Regaining that line at any point in time going into 2023 will change the dynamic. And then all of a sudden, we have potential here for the dollar rising even as high as towards the top of this channel or above. Don't forget, the Fed is still tightening. The Fed is still raising rates, and quantitative tightening is still running. How long today's price action lasts, I am not sure. We have to wait and see. It's been so far about 12 hours, maybe a little bit more. We still got to wait and see what happens and what the result is. Breaking, this is what we're targeting below this last breakdown, retest, resumption, targeting in this area over here. Next, breakdown below. Oof, that's a major breakdown, but I think you have to give it more time. You can see the 10-year. We looked at this in yesterday's session together that was released on the public. We talked about the breakout above this trend line, right? That's a place to lean in to buy. You had this major resistance above us because of what happened out of the Bank of Japan. We gapped up and closed above it. That's, I mean, CTM all day long, right? What else? The equity markets, I mean, very bearish. We looked at the breakdowns that have occurred this week, but at this point in time, you are approaching holiday trading. I think it's time to close up positions, get on the sidelines, and wait to see what happens once traders and investors return at the beginning of January. It remains this major resistance all of 2022. Major resistance. This was the CPI. This was a big gravestone. So look, at this point in time, I think that you want to back off. I think that you want to wait. Not a good time to be in the markets. You want to go ahead enjoying the family. You want to put in some personal time, some thoughtful time. You need to figure out what you're going to do. You need to look at what you did well in 2022. You need to look at what you could do better, and you need to have a plan in place that you could execute. You have to stop jumping around from one thing to the next. It's like being caught in a whirlwind. It's like being in the undertow of the surf. It pulls you around from one way to the next, and you're not going to get anywhere. You have to be really mindful, really thoughtful about the way that you approach markets. I just wanted to look at the oil Oil over here is approaching a major inflection point. I'm watching to see, this is negative, right? We're below this area of resistance. And you can see that we've had a touch into it. And then I'm watching to see if we break above it. Breaking above here, and if the dollar decline continues, that should be bullish for oil. By the way, the more that oil winds up climbing, then all of a sudden you're going to see the inflation, which peaked in June and is rolling over, that could turn around easily in 2023. And that could cause the Fed to what? To have to continue tightening because they're trying so hard. They've been so aggressive and the economy keeps going. And if the economy keeps going and they're tightening and then all of a sudden inflation keeps rising, all they could do is try to bring the economy to a halt and raise rates further. 2022, unprecedented times. 2023, unprecedented times. No one knows what's going to happen. Stop thinking that like, oh, price is going to go down to X and then it's going to like shoot up to Y. Or stop thinking like price is going up to X and then it's going to go down. Who knows what's going to happen? And not only over next year, but throughout this decade, monetary reset is underway. All those past models are broken. Beautiful tweet this morning by TXMC Trades saying exactly that, pointing that out. Beautiful stuff. If you are watching this today, over the weekend, or throughout the holiday, and you got this far, please go ahead and hit that like button and light it up. I'm glad you were here. It is good that you're here. I'm watching to see what happens. It's very important if oil breaks out above here, clears this resistance, because at that point then it's targeting 93 again. That's a big move. That also has greater implications as far as what my expectations for future inflation is going to be, as well as, by the way, if oil begins to rise, if, I don't know. Right? We did a good job over here, though, didn't we? And then we did a good job holding it through over here on this breakout. Remember, giving it room. We did a fantastic job to that. I don't know what's going to happen, but if oil does, it could just easily be rejected here. This is bearish. Major bearish breakdown. It's a breakdown. It's a retest. If it resumes down, we're going much lower, and we'll just be like, well, of course, it's just pricing in a global recession coming and a slowdown. That could happen. That right now it's negative, but it's also at an inflection point. If it breaks above, I want to be early and I want to be as right as I can. That means if it happens, I know where I'm wrong, right? But if that happens, it has much greater implications for what the macro is going to look like in 2022. What's up, my brother? And I want to make sure that together we're able to go ahead and do it together. Stay on the right side, because listen, it takes a lot of work. We're at it each and every day. There's nothing easy about it. Speaking of dollar cost averaging, we got head snack into dollar cost averaging. I am in the process of getting head snack into doing dollar cost averaging plus, assuring that he's able to go ahead and reach and meet these goals that he is using as an extra, I don't want to call it revenue stream. This is like an extra potential nest egg and hit to protect him and his family. Let's play a little head snack before we get into CTM positioning.
Markets, analyzing the charts, hitting projected targets within the margin. Find the flow, sip a matcha, and wait for the waves to come in with lobsters. The kind-hearted Jordan Fosters, working smarter, not harder to move the markers. On his way to conquer, trading and investing, drinking the coffee while reflecting on the blessing. The markets are not crashing, the prices might be slashing, just to pretend they're in fashion. Hit the like button, comments, and smash it. Boom, boom, Jordan in the room, grab the bull by the horns and through the moon. Flow from the plateau, make the play. Boom, boom, it's a taco day.
It's a taco day. It's a taco day.
the battle of the bulls and the bears, but there's no question when you start playing some honeymoon, when you start playing some head snack, all of a sudden you get that focus you need, and then all of a sudden things start coming together. By the way, heads up over here as we get into CTM positioning. If you are now joining the Discord on the last reorg, make sure that you go ahead and you email me so I could upgrade you to CTM Core, because the Discord is now being set up, or the new invite is being sent out today for those joining CTM, so we could get them all situated as well. And I want to make sure, instead of, if you're CTM Core, if instead of just seeing the CTM section over here, right, that you're able to see all the sections, obviously, of the Discord. All right. With that being said, let's get into a little CTM positioning over here. And Bitcoin on the buy side on the left over here, highlighted in blue, is simply out of the market, waiting to get back into the market. I really want to enforce in you, buy side only with no leverage is absolutely enough to do what it takes, right? Because first of all, you're going to be out of the market. If the market is coming off, you're going to be preserving that capital. And when the market does do things, Bitcoin things, you're going to be participating on the upside. Ethereum just as well. And you can see that Bitcoin is getting close, by the way. It's just $250 away from triggering a buy signal, momentum taking it back into the market. It's not very far off, right? Same thing with Ethereum over here, out on the sidelines, waiting and watching for that next buy signal. Cardano's been out of the market all of 2022. Not one trade on the buy side all of 2022. There are a lot of people holding Cardano since $1.50. Listen, it's not too late to develop a plan now, to execute on it, and change your 2023 all the way through the next decade. You're just not too late. Buying and holding is simply not a strategy. Come back over here and give it 2 years. This is since 2021, 2 years, right? When things are bouncing off the upside, go ahead and participate. If Cardano's, go back 3 years. Can we get 3 years up? If we go back 3 years, you could see. I know it's coming. Let's try this. Let's not. Let's move over to GBTC. We're going to have to say GBTC, same thing. It's been out of the market 2022, except for this one 4% move occurred, 4% loss that occurred in the beginning of April. Out of the market. Look, a lot of people holding GBTC, they're getting crushed on the premium. They're getting crushed on the price. A lot of people viewing their 401k as an avenue to go ahead and participate in Bitcoin through the GBTC fund, the Grayscale fund. You have to have a plan and you have to be able to execute to it. There's no other way. Look, through 2 years, going back to 2021, only a 3% gain. Yeah, you know what though? You preserved all that capital. You're not down, whatever it is on the premium plus price. Go back into 2020. Okay, it's not as profitable as it is trading Bitcoin, whether it's on the daily or the 8 hour. But for something like those that are trading in a 401k, it is for sure an option to think about, and it is a way to keep safe and protected. This is the buy and the sell side, looking at it together. And we're looking at Bitcoin over here. This is going back to 2020. 1,300% return, 17% drawdown. Right? Coming back into 2021, the last 2 years, 390% return, 16% drawdown. Even in 2022, 74% return. Getting it done methodically, if I go back further, the returns are ridiculous. I don't need to do that. I just wanted to show you there was nothing special about these last 2 years. There was nothing special about these last years, and there was nothing special about last year. If that continues going forward, I want to make sure that you are there to be able to profit. Bitcoin is good. Ethereum has been fantastic, right? Let's look at Ethereum in 2022. And you can see Ethereum in 2022 is, again, this was built March 14th, CTM 2.0 released, Hive Mind building during the bear market. These are back tested results. We've only been forward trading since March and into April. This is going back all the way to the beginning of 2022. 270% return. Was anything special about 2020? No. Come back further to 2021, 2 years now. That's pretty impressive. Look at the drawdown. That's pretty impressive. Look at the drawdown. Forget it. Go back to 2020, right? And that's almost unrealistic, unreal. It's not. Come back further, 2019. It's compounding. And look at. Come back to 2018. This is a 2 bear markets. That's 2 bear markets, 23% drawdown. Look at that, and it's just compounded because nothing special happened in 2018. It was a bear market, right? It's that compounding return. It's 478% return, but it's compounding together where you see those crazy results. And Cardano, same thing over here. This is the 2020. What are you doing for 2023? Let's take a look a little further. This is including current positioning, also for BNB, holding that open short trade over here, 9.6%. By the way, notice how Ethereum, right, on that bounce that we're seeing off the Bank of Japan, CTM 2.0 is still currently holding short positions, 0.7% into loss. And on Bitcoin, 1.7% into loss. Obviously, prior to the Bank of Japan announcing their adjustment to yield curve control, those returns were significantly higher. At this point in time, though, giving them back, it doesn't matter. Wherever the momentum takes us, we're going to stay on the right side, cutting losses short and pushing those gains. Cutting losses short, managing risk, holding on to winners, making sure methodically profiting, not just buying and holding and hoping. You can see BNB still holding Cardano and BNB holding significant short positions still into profit. We'll see whether or not these get stopped out or not they fall back into profit as this continues. You can see it and view it over here very well. We're looking at over here since June. You could see that the new all-time highs on Bitcoin up here on top, just running flat, not making new all-time highs. It's down 9%, right? Same thing with Ethereum. Why it was able through June and into August to make new all-time highs, it's been running flat since. This is Ethereum here in black, down about 9% as well. Why that was happening, here's why portfolio allocation is so tremendous. Big shout out to Sale Guy. Big shout out to Fisher King. You can see over here in green in Cardano, why Bitcoin off 9%, why Ethereum off 9%, running flat. By the way, sometimes this happens for 4, 5, 6 months. Always. Here's another period over here. Bitcoin running flat. Ethereum running flat. Now, when you have portfolio allocation, I call it the beautiful dance taking place, you can see over here why these two are running flat, not making all. Cardano takes the torch, runs up to new all-time highs. Doesn't matter, buy side, sell side. And then over here, BNB was doing the same thing. BNB is not included in the top 3, but there are some people who have embraced it. That's why I'm highlighting it now. And it also illustrates why portfolio allocation really together works. Silver, let's close it out. I didn't get a chance to look at what happened with gold and silver. Let me make sure to do that. Let me jump back over to here. Let me start off with gold, right? And all as I'm going to say is that this line over here, first of all, right? We have a bullish bias on gold. This is set up if this trend line breaks. If this trend line breaks, this was setting up a potential short position. Closing above this area of resistance, that's very bullish repair taking place. Nevertheless, this trend line remains. We are seeing yields rise. Rising yields could put pressure on gold. Now, I don't know if this holds. When we said, okay, well, we have the breakout on yields, right? We said we got important resistance above. It looks like we're closing above that today. So yields are rising. that could potentially put pressure on gold. But the way that sound money is reacting to what looks like the future failure of central banks is very notable. The way that Bitcoin, the way that crypto, the way that gold, silver reacted, in my opinion, is signal it might not be lasting. Like I said, it's only been one day, not even 24 hours yet. I don't know how long this particular move will last, but that's a future signal because the Bank of Japan might win this battle. They literally might win this battle. But as far as them winning in the long term, that remains to be seen, right? We know where all fiat heads. So the reaction, the initial reaction of gold, of Bitcoin, to me is signal. How long it lasts, I don't know. Rising yields could put pressure. This stands. A breakdown below this trend line would set up a sell impulse, and it would set it up back towards the trend. This was the breakout, and it wasn't, I think the way that we did it was not until we cleared above here that we looked at gold as being positive. Silver, same exact setup as gold. Silver outperforming very well here on the upside, and it's coming into resistance right now. You can see where my mouse is right over here. You could see that this was support that's broken. That now could be resistance on the upside. You could see if I zoom out a little, right? You could see this area over here, where this was also holding. Let's go ahead and just draw that line in just for our awareness so that we are aware of it, right? And right over there. So silver clearing this line though, if it's able to close above here, right? And that's not an exact line. You can see there's a little area over here, but clearing above here and then consolidating and maybe confirming that broken major level and then resuming off, and probably where it goes up to is 2460 in that area, like a break above this resistance. That's where probably it turns around. See if it could confirm this. That is another major repair that would be taking place. So, everyone, thanks for being here for this last session, this last public session of 2022. I wish you and your family the very, very best. You have to work harder than ever. There's no question about it. We can't take anything for granted. We have to make sure that we are that we believe that there are no certainties, that we take extra precautions, that we spend more time thinking than reacting, and then make sure that we're able to focus, to implement discipline, and to go ahead and surround ourselves by people that could help us make these. Look, Michael, I don't have a lifetime option, but the pricing is ridiculous. I was speaking with a friend last night who was like, Jordan, I have to ask you. I was at this, it's not like Tony Robbins, but it's a different type of life, energizer thing. And I love those things. I'm really all about positive mindset and stuff like that. And after that seminar, they had this offer for this seminar into trading. And it was trading options. It was a 3-day course. And then after that course, they're like, okay, now that you have an introduction, don't do anything. But if you're interested in our program, it's for the coaching included, it's $16,000. For just the course itself, it's $10,000. And there's obviously no concrete strategy that has any type of even back-tested proven results. I was like, definitely do not do that. And I told him about the simple dollar cost averaging plus strategy. I was like, this is going to give you an opportunity to have an additional nest egg potential. And it's not going to take your time. You get an alert on your phone. In 2022, there was one trade. In 2021, 9 trades. Once a day. Do it with a traditional broker. You could, that's what you should be doing. Do not those courses are priced ridiculously. What I offer and what we offer is immense. The price is obviously next to nothing. Do not sign up for the middle option, the CTM course. It's not available. If you do, it'll be refunded. That is why we launched over here the CTM Discord. It's a way for us to kind of head and be able to filter out who we feel will be a good addition into CTM Core in the future, who is able to offer talent that could help us go further as we have climbed the summit and look at the next and say that's where we're headed over the next 10 years. How are we going to get there? Who is going to help us? By seeing how people interact and what they will be able to discern who we want to extend that invitation to, as well as someone who is, positive and supportive. Someone who is just simply bringing light and that positive attitude. It's just as important. And there are a lot of people who are introverts and they don't say much, but they're disciplined. They're executing as they should, all types. But first there is obviously a screening process inside CTM Core. All of the strategy development is shared. Exactly how everything is done, because everyone working together is then able to go ahead and contribute and bring it even further. But someone just walking in the door, they could have access to being able to learn and execute off these strategies. But that's how we set it up, Juan, also, that's the next thing too that's very important is we are seeing a major breakout occurring on yields over here. It's very important coming into 2023. So the next thing that we're going to have to do is see where that trade is wrong. And we're not even close to it, right? If we go back to yesterday's live stream, the way that I set up the trade was this, right? And I put the stop loss right under here, right? And there's no TP. We let momentum take us in and out of the market. So, the next thing that needs to be done, and it's still a little too soon, that original TP stands, when there's a time to go ahead and draw in any type of trend line that would show or should be support, and then when it's pierced would be any type of reversal. Right now, this trade is sometimes that happens. This is because of the Bank of Japan, and it was just the right timing, being on the right side, and you just got to let it go right now. Original stop loss holds as you move into and close above that important resistance we talked about yesterday. Sure, right away, stop loss can be moved to break even, and should be, because stop loss is always moved to break even into that first resistance or support, and we're clearing it. So Juan, thank you for ending on that note. And Steve, right? That's not true. You made a big contribution just this week when we were talking about, as we do our work, to CME and CME futures, because we don't trust anyone. It's most especially any type of crypto brokers. And then you brought up and highlighted what we need to do about the volatility that occurs over the weekends. And that's what I'm talking about. There are many people that are introverted. There are many people committed in that they show up, they're following, or whatever their career and their family allows for, right? And that's just as important. Someone who's positive and supportive is just as important as tomorrow morning we have a developers meeting, as those who are working on that type of end, as the CTM Summit team. Everyone has their own role to play. We just want to make sure, because we got a good thing going, that we don't dilute it. We want to make sure that the opportunity is open to everyone, but we got to see what's up before that it's completely embraced. So what a treasure for me. Thank you always for the comments on any public video. Really feel that a friendship is developed in 2022. I got to wish you and your family the best yesterday, and I do that for everyone. Everyone, have a beautiful, beautiful time. Take this time. You got a couple of weeks here to be very thoughtful and make sure 2023 and beyond, you put yourself in a position of power. You surround yourself by the right people, and you go ahead and you spend, especially in this coming week, the week ahead, some quiet time together, some quiet time, right? With yourself, with your creator. Everyone, thank you for being such a blessing. May God bless you. I'll see you all, right? CTM, we got developers meeting in the morning, then CTM session right after that. Then I'm flying back home to Mexico. Thursday, there'll be no session. Friday, we're back on. Everyone else, God bless you. I'll see you all in 2023. Have a wonderful, 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 wonderful time. Amen. Sold the $. Massive contribution just by being you. I appreciate that, brother. Everyone, I'll see you soon. I feel like we should go out with some honeymoon. I'm going to play some honeymoon. I don't want to say goodbye. No, but I do want to hear some honeymoon. So give me 1 second over here. We're going to go out the right way. That's not it. OG, big up, my brother. Big contribution to CTM. Grateful for you. Diamond, thank you, my brother. Beautiful, 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 beautiful holiday. Greg, lots of love. Everyone, I'll see you all in 2023. We are that's what I mean. Affirmation is so important. Having a plan is so important. One of the most important things that you can do if you're trading on the daily time frame, only look at the chart at the time of a potential signal period. Now you could just get an alert to your phone on the TradingView app. Very easy to set up alerts. If you're trading something more intensive, the 8-hour time frame, only looking at the chart during a signal period is going to prevent you from doing things that you should not do, which is trading outside of your plan. Look, once you have a strategy in place, most difficult thing in the markets is developing a detailed plan with an edge.
All right. Once you're able to do that, the next most important thing is working on thyself, is working on discipline, is working on focus, it's working on execution so that you can compete on an elite level. Surround yourself around those who are able to do it. Let me highlight that one time. That's profound right over there, and it's true, right? Everyone, thanks for being here. Dave, the best to you and your family. Everyone, I'll see you all soon.